The next chart is for Rolls-Royce, and this is a beautiful upmarket. You would probably struggle to find a share that has been so strong for so long. Ever since the low points, it's pretty much made higher highs. We've had pullbacks, which is fine in a bull market, but we have respected the uptrend. So a trader would do very, very well in buying dips in this market. And while shares like this have been ascending, you've probably got hundreds of people who call themselves traders buying shares in mining stocks and penny stocks that are making lower lows. All we've done is drawn in two lines on this as buying lines, and we've pretty much tested it and bounced off of it recently in the last two sessions. We would expect Rolls-Royce to come up to that sort of price. We could put in a horizontal trend line to mark a resistance area, which is probably where we would expect the price to go short term. We'll just zoom in a little bit just to show you this trend line, and that is pretty much where we would expect Rolls-Royce to come up to test as a resistance. If we take out the second buy line and just show you how simple this is, we found a low point, found another low point. There was a little bit of flip-flop in here, but we can, appreciate that that is a low point. The market then went up highwards and then it bounced right off of that trend line, and it's done it again in the last two sessions. It's bounced off the trend line. We may get a small pullback, but we do expect 1250 to be hit on Rolls-Royce. We expect as well, would you really bet against this trend getting above 1250? You probably wouldn't. And this is as much a lesson in discipline as it is technical analysis, because you could be an absolute idiot and buy shares in Rolls-Royce in a setup like this and make money. Yet there's lots of traders who are overcomplicating things, trying to trade diamonds and breakouts from triangles when there's beautiful up markets like this. Just buy the dips in a share price like this and you will make money. If we switch to the weekly chart now, so each of these candles represents 1 week of price movement. We need to really talk about this share because it has been in a really big bull market for quite some time. Now, nothing will go up forever. So we do need to start thinking of what do we do if things go wrong. We need to draw in a trend line, which we have done. Ever since the crash of 2008, it pretty much put in a low in 2009. We can use that low point to draw and connect to other low points. So if we start here, since the crash of 2009, find some other low points. The market got below it, but that's not the end of the world because it is respecting it once it got back above it. So with Rolls-Royce, we would expect a touch of that trend line again. If that trend line got broken, then we would expect Rolls-Royce to have quite a substantial pullback. But all the time it is above that trend line, we are buying dips in Rolls-Royce. So with a setup like this, when companies do get to all-time highs, it's not up to us as traders to say, oh, it's at all-time highs, I don't want to buy it now. If there's technical reasons to say that this share price will go up even more, then we'll be buyers. We don't use our opinions to think, oh, this is quite high, this share, let's start selling it. Let's look at the technical aspects and see what the charts are telling us. Now, if that trend line did get broken, what we would need to do is look for pauses on the way up, because often where we found resistance on the way up, that will provide support on the way back down. Now, you maybe could draw a little few trend lines across here, but they're not really strong until we get to the point where we struggled here. On the way up, you can see that this price was quite hard to break. So that would be a good support level. And also, you've got another trend line here, but you will note that this is quite a bit away from the price. So we might not see these prices for absolute years with Rolls-Royce, but it's what you think as a trader.